So I'm Dr. Akin per usual, and I am your accounting tutor to help you win in all things financial accounting and managerial accounting. My hope and my goal is that these videos will be supplement to the lectures that you're already receiving in class. And so hopefully you can take study time or be more efficient and effective in your study time with these videos. Now, this is going to be the last video I'm going to do as it relates to the accounting cycle. So this is the part 3. I encourage you to check out part 1, 2, and 3 where we honestly talk about the accounting cycle, which is extremely important if you're going to pass chapters, your first couple of chapters, or just get your head around it. So here is the kind of the conclusion where we are at the financial statement level. Remember, we said that the whole goal of financial accounting is to produce the four financial statements, right? The four financial statements are the income statement, the statement of retained earning, balance sheet, and cash flow. Now, for this video, am only going to focus on 3 out of the 4. So I'm only going to focus on income, retained earnings, and balance sheet. Not only that, but also another disclaimer is I'm only going to focus on the single step income statement. So let me put that single step income statement and the unclassified. So in other words, I only want to focus on the simplistic financial statements in this video. I'm going to do and cover the other more complex, if you would, financial statement iterations or versions, which are called the multi-step income and the classified balance sheet. I'll do that a little bit later when I have a more robust adjusted trial balance. But I do want to just spend time and really just talk through this video specifically. I usually do my how-to videos where I'm going over it and I'm more hands-on. But with this video, I think it's probably best to learn as we talk through it rather than me trying to do it. Because honestly, guys, with the accounting cycle, the step from adjusted trial balance to financial statement is really a copy and paste exercise. In fact, the whole financial statement, so let me put some notes here. So I usually like to do my notes, you know me. I like to just have my notes. Students say that they enjoy notes particularly. But honestly, the first one is what you need to know about. So what you need to know about, let's put notes on financial statement, call it SF. All right, so what you need to know, number one, is that the financial statements, so financial statements are a illustration of the adjusted trial balance. That's really all it is. That's the first thing you know. And what I mean by that is literally you're just taking the adjusted trial balance and you're just putting them into different reports. That's all you're doing. So in other words, it's a copy and paste exercise. Copy and paste. That's all you're really doing, guys. And I know you're like, man, this guy's making it seem like it's so simple, but it's not that simple. My friends, it is that simple, right? And I'm going to show you in a moment, but you're literally just copy and pasting, right? Obviously, you're putting them into different formats, which would then require you to remember. So that's really where the hard work is with financial statements, is remembering the format. But the reality is, it's really just putting these stuff into, or it's really just putting the accounts from the adjusted trial balance into different types of formats. So I just wanted to walk you through this real quick and be done. Now, for the income statement, what you need to know is that it's really just looking at two things. It's really just looking at two things. So if I were to put it here, let's go ahead and put some more notes. Income statement focuses on revenues and expenses. That's really it. So the income statement here is looking at revenues and expenses. So you really only have 3 sections. Oh, before I get into all of that, let me just backtrack a little bit. I went a little bit ahead of myself. Let's talk about the commonality, just really quickly, the commonality amongst these financial statements, right? So the commonality amongst these financial statements, very important, is that they're all going to share So share similar headers. Okay, headers. I tell my students this all the time. It's very, very important. But each financial statement is going to have what I call a three-level header. Okay, so you just got to remember this. Again, that's why I said the hard work in the financial statements is really just memory and committing this stuff to memory. But yes, okay, cool. So three-level header, and that's what you see here. These are the three-level headers. So I kind of just I like to tell my students and give it to them up front, so you just are aware. So level one is going to be the company's name. Okay, level two is going to be the report name. And then level three is going to be the date of the report, or the dates that the report is capturing. Okay, so that's really what your headers are about. So as you see here for the income statement, we have the company's name, Dr. Atkins Company. Then we have the report name. Like I said, this is a single step income. So the single step is the basic one. The more complex is called the multi-step. I'm going to do that in future videos. And then we're going to, so then is the date of the report. I guess that's not really a good, I would say the date being captured in the report. That's more wordy, but it's true. It's more accurate. So the dates or the date that is being captured is for the month of December. Okay. So that's your three-level header. That's going to cut across every single statement. Dr. Akin, level one, statement of retained earnings. Level two, this is the dates that is capturing. Same thing for the balance sheet. Okay, level one, level two, level three. So you ought to know that. So for the income specifically, the income statement, we're looking at three sections. Section number one is revenue. Section number two are expenses. Now, here's the goal. Okay, so revenue, when you're looking at revenue and expenses, is either going to produce net income, which is when revenue is greater than expenses. Okay, so when revenue is greater than expenses, we call that net income. Okay, then, or it can be a net loss, which is not really talked about a lot because obviously we want businesses to always make net income. Let me just put this here. I guess it's good to put here. When we say net income, we're referring to profit, right? Or, bottom line, whatever. So these are words that we use interchangeable, okay? Profit, okay? So stuff like that. Okay, but seriously, guys, we can also actually produce a net loss. So a net loss occurs when revenues are less than expenses. So that actually happens from time to time. And obviously, we don't want it to happen a lot, but it happens. But teachers and professors, we usually probably just stay on the net income side because obviously it's for learning purposes and it's cleaner to learn through net income. But there is potential also for net loss. So just keep your head on the swivel because your professor may throw that in there either in an exam or a quiz or whatever may have you. All right, so again, revenue and expenses, and then net income. So we're literally, quite literally, just pulling the accounts and the amounts from the adjusted trial balance, right? So for the revenues, as you can see, there's only one revenue account in the adjusted trial balance, okay? But then we have a lot of expenses. So our expenses are here. So these are all of our expense accounts. Now, I do want you to note, guys, that with the income statement, so here's another note for you all. There are three columns, okay? Three columns are in the income statement, okay? So column number one is going to be the account name. So that's what you see here, the account name. Now, this is also very important though. A column number two is going to be what I call the math column. Okay, so the math column, is a column where If there are multiple of the same accounts, we want to put them in one column. We want to itemize them in one column. And then we put the total or the sum in the third column, which I call the final number column. Okay? The final number column. So as you see here, sorry, trying to get myself. So because we only have one revenue account, we'll just put it in the final number column. But because we have multiple expenses, we want to list them and then put the total in the final number column. Okay? And then quite literally all you're doing is taking revenues minus expenses to get you a net income. All right? So now, here's the thing. Once we've done our net income, this number is then going to be carried over into our statement of retained earnings. There's going to be a consistent theme. So once we figure out net income, is then going to be filtered into our retained earnings. Okay. So let's put that as a point in our notes, right? That our income statement influences our retained earnings statement. Okay. That's very, very important, because what I like to tell students is, if you get this number wrong, then guess what? You're going to get that number wrong, okay? Or you're going to get this number wrong. So let's spend a little time talking about statement of retained earnings. So statement of retained earnings is actually a more trickier one for students. I don't know why, but it's just tricky. So the statement of retained earnings is looking at, this is very important. Remember that we're looking at the year or the month ended, not year, it needs to be updated, for the month ended December 31st. So how the statement of retained earnings then starts with, very critical, it starts with the beginning. This is very, very important. You want to put in your notes the beginning balance in retained earnings. Okay? This is very, very critical. It starts off with the beginning balance and retained earnings, right? So not the ending balance, but the beginning balance of retained earnings. Now, this is very important. Where do we find the beginning balance of retained earnings? We find it in the adjusting trial balance. Okay, so very important. I'm going to put that as another comment. Okay, reply to the comment. Okay, so where do we find beginning balance of RE? That's retained earnings, right? So we find it, or it can be found in the adjusted trial balance. Adjusted trial balance. That's where it can be found, guys. Very, very critical. So when we go to our adjusted trial balance and we look at retained earnings, we see that we don't have anything. So therefore, we put 0. Now, once we figure out our beginning retained earnings, which is a copy and paste exercise, we're also then going to copy and paste over the net income that we produce from the income statement. That's very important. This net income, so let's put it in our notes. Net income or net loss can come from, or comes from, the income statement. Okay, very critical. Another thing to note, this is also what I want to know. If it's a net income, we add. Net loss, we subtract. So you want to keep that in the back of your mind. So because it's a net income, we have plus here. If it's a net loss, we would put subtract. Okay, so 0 plus whatever the net income, that's going to give us our balance, right? Then we want to subtract out dividends. This dividends is coming from the adjusted trial balance. If you go to dividends, 7,000, that's where we get to 7,300. That's going to give us our statement of retained earnings as of, this is statement of retained earnings as of 2020, right? So you want to make that clear. All right. So now that we have that, or excuse me, as of 2019, is December 31st of 2019. So now that we have this, right, guys, This number is then going to influence our balance sheet, okay? So now that we have this number, it's going to influence our balance sheet. So you can start to see the connection, right? That the income statement influenced the retained earnings influence the balance sheet. So let's talk about the balance sheet for a little bit. The balance sheet is comprised of assets, liabilities, and equity. So you want to write it down, okay? So let's come here. Okay, so so retained earnings influences balance sheet. Okay, balance sheet. And then let's back that out. All right, cool. That out. All right, cool. So now let's look at the balance sheet. The balance sheet is made up of assets equals liability plus equity. So I do want to put that on there, right? So the balance sheet is a mirror of the accounting equation. Again, if you don't know about the accounting equation, please refer to my previous videos where I talk about accounting equation made simple. But essentially, the accounting equation is assets equals liability plus equity. So that's all we're doing with the balance sheet. We're really just representing or illustrating this concept. So you have your asset section here, liability section here, equity section here. So what you do again is you go to, let me back out of here. We go to our adjusted trial balance. 80 may be too small. Okay, so we go to our adjusted trial balance and we pull out all the asset accounts. So we're going to pull out all the asset accounts. And with the balance sheet, it's the same as the income. You're going to have a math column, final column. If they have the same accounts, you want to put them in, list them in the math column and then put the final number here. So here are all your assets. Now, what I want to point out is here, these two. Now, when you're dealing with, you want to put this in your notes. Whenever you're dealing with PPE assets, you need to net the amount. So what are you talking about here, Professor Akin? What is a PPE? PPE stands for property, plant, and equipment. Okay? So when you're, I think you can expand this, right? No? You can't expand this? Oh, man. Okay, let me put it down then. I'll put it down here then. All right, cool. So a little bit more in the matter. So PPE stands for property, plant, and equipment, right? So property, plant, and equipment. So whenever you're dealing with, okay, perfect. So whenever you're dealing with property, plant, or equipment, you need to net the amount. Then the question is, what are we netting? So you're netting the original you want to net the original amount to the depreciation amount. Okay? That's what we mean by net. And that makes sense, right? Why does that make sense? Because if you think about it, what we're trying to capture here is the value of the asset, the property, plant, or equipment at December 31st. You see? Now, this is not December 30, this is not at December 31st, or this is at December 31st. However, though, this office equipment is not truly $8,160. This is the value of it when we first got it, but we have to net it against what we've been tracking as far as the depreciation value of that asset. So as you can see here, for office equipment, we took 8,160 minus 1,375, and that got us 6,785, okay? And the same with computer. We took the original value, which is 22, minus whatever the depreciation, which is 408, and that got us 21,592. So you want to pay careful attention that we have to net these amounts, okay? You have to net these amounts. Now, some professors may say net it like this. I like it like this because it's cleaner. Or some professors may actually have you write out the equipment, office equipment. Then they would say, hey, go ahead and put the accumulated depreciation, and then you'll be good here. Or actually put less accumulated depreciation, right? And they will want you to itemize it like that, either by 2 or by 1. I think, as you can see, 1 looks a lot cleaner than 2. So that's why. But I just wanted to throw it out there. Depending on your professor, they may go either or. But this should be sufficient. This obviously shows that you know what you're talking about and doing. Okay, so we talked about the assets. Now I do want to talk about liabilities. Now your liabilities are going to be your liabilities accounts. Also, please just pay careful attention to that unearned revenue is a liability account. Again, please go back and refer to my video called Account Debits and Credits Explained, and I go over why that's the case. But these are your liabilities. Now, this is the tricky part that I want you to pay attention to. Common stock, again, you're going to get from the trial balance, but unearned revenue, or excuse me, retained earnings, you should not get from the trial balance. When you're dealing with balance sheets, do not get retained earnings from the adjusted trial balance. You get retained earnings from the retained earnings statements. Too many times, year over year, I see students making this mistake, and it will throw off your numbers. Because if the retained earnings balance that is in here, it goes into retained earnings. What the balance sheet is looking for with retained earnings is what you got from the retained earnings statement. Okay? So guys, this is it. I just wanted to talk you through the financial statements. Again, this is a copy and paste exercise, but it's just little things that you just have to pay attention to. All right, if you have any questions, as always, put it in the comment section. Please make sure to like, comment, and subscribe. Share with somebody that also may be struggling with accounting, and I hope you pass your exam. All right, guys, see you. Have a good one.